Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading, and you are tuned into our podcast, The Secret War on Cash, where we take a look at some of the things that are taking place in the financial markets, good, bad, or otherwise. Unfortunately, a lot of our conversation here over the last several weeks has been more bad than good, with everything going on with the war, with oil, with inflation, et cetera, et cetera. But today, actually, kind of a little bit positive. We're going to talk about the upside of things. And I've got my co host here, Chris Agelastos, to do that with us. Chris, how are you today?
Doing well, doing well. Good morning.
Good morning. I know you just returned from a little family vacay in California as the summer's kind of winding down right now. So, welcome back.
Yeah, thank
All
you.
right. Let's get after it here. So, our first article from King's World News, or King World News, silver's all-time high of 118, which was unbelievable when it hit it, and it seems like a minute ago that it was there. But they're saying
Yeah.
that high will not stand for long, and they're talking about how with everything that's been happening with gold and silver, a little bit of pullback here recently. The bottom line is that the basically the market dynamics that existed back then that caused them to appreciate to the levels that they did, not only are those same factors still present today, but they're actually intensifying, if you will. And especially when you look at some of these changes that have recently taken place with the amount of oil that is not making oil and other products, I should say, that are not making it to our shores, in addition to anything, any semblance or degree of what we would refer to as our reserves of any kind, those have been depleted as well. And so it's a very interesting and compelling article here, and talking about the fact that metals prices, not just silver, gold as well, are really on the verge or on the cusp of probably a pretty explosive growth stage or phase.
Yeah, I would tell people this is a really good buying opportunity. This is what we look for. And I know in my about 20 years here, and gee, I think you're at like 30, 35 plus or something like that now. We've seen a lot of these runs in the market over the years. And anytime we have a nice big growth spurt, it has to come back a little bit. Things shake out of the market a little bit before it can go on another run. That's a healthy pullback. And that's when you want to, take some of your money that's on the sidelines and get in and take advantage of it. And what they're talking about here is that all of the key variables that, gave us this last run up to that 118 are still in place. Physical supply for the last several years, I think we're hitting about 5 years in a row now, where we've had production deficits. And above ground stores of silver inventory are also being depleted. So you've got that, simple supply side of it. And then you have investment demand, which is expected to continue to grow as people have seen this pullback and they want to put more money into the market. It's not just happening. We talk a lot here about the U.S., but this is happening globally. And you add into that obviously the monetary policy and geopolitical trends with some of the battles we have going on overseas and the oil issues and inflation and all of that. All of those key variables are still there. If half of them were missing, compared to 6 months ago or a year ago, then maybe we could say, okay, things are going to level out and stay relatively flat for a while. But that's not the case. All of those key factors are there. So, like a sailboat, we've still got the winds at our backs, pushing the sails, and so we should see another run here relatively soon. And are we going to break that high in the next 2 months or the next 8 months? It's hard to time it exactly, but if you have some funds that you can set aside for the next year or a couple of years and ride that out, you should do rather well.
Yeah, for sure. Well, and one of the things they talk about here with the price of silver that I found interesting, excuse me, they refer to the pullback that we experienced as a clawback, and we're right
Mhm.
now in the midst of its present clawback. And the interesting thing being is that the clawback from that high is about 53% currently. But of that 53%, 40% of that clawback took place in the first 6 days of its decline. And so it was a very, my point being is that in what they're talking about here, it's a very knee jerk reaction the market had. And the beauty of that too is that I think for those people who are positioned in silver and or are looking to be positioned in silver, is that this is something that the market took away too quickly, and I think it'll give
Mhm.
it back even more quickly as they're talking about here. Now,
Yeah.
skipping ahead to the next article, also from King World News, that talking about what gold prices are up to. They're also saying, and we touched on gold in the earlier article, but we may see the price of gold double in just a few months. They're talking about, and to me, Chris, as I read through this, and I'll let you kind of talk about it more. But the
Mhm.
bottom line is that they're in a nutshell. What they're talking about is how we went through this phase over the last seems like 2 years, but it's been not even quite a year yet, I believe, largely triggered by what's been happening over in the Middle East with oil and whatnot. But we went through this period where it just seemed like the markets were frozen or kind of fell asleep a little bit. And now, maybe it's because we're nearing the end of summer and, things are in its own weird kind of way. They've kind of settled down a tiny bit, but what a lot of the things that are coming out of the news now are really leaning towards is the markets are starting to wake up. And as they do wake up, they're not only just kind of going to trudge along, but they're like waking up and kind of rested and ready to go, is what it seems like.
Yeah, and we know that more often than not, the fourth quarter of the year is when we see quite a bit of growth in gold prices as well. So we're starting to head into that period in the next month or so. So that obviously helps as well. But we've hit a really solid floor in this $4,000 range. Anywhere from say 38.5 to 4,200 is a really good entry point for people to get into gold. And we know that every time gold has a run, it has beat its previous high. So the previous high in gold is in the 5,500 range, give or take. So again, just like with silver, we should approach and go past that mark. Likely in the next year or so. But they also talk about here that we're really just one major event, whether it's a geopolitical event, another battle that we have to fight with other nations, or monetary policy, even within our own nation, let alone what's happening worldwide with BRICS and the US dollar, losing leverage as a reserve currency. So any one major event could take us well past that 5,500 in a matter of weeks. I mean, it
Sure.
can happen. Usually when it runs, right, it runs fast. So again, we don't know, is that going to happen in the next month or two or in the next year? And that's why I tell people, when you see an opportunity like this and you have good prices, get in, shift some of your funds over there, not only for the investment gain, which we all like to see, but just so that you're also protected and shielded from everything that is going on. I mean, we know, looking back at the last several years, I mean, especially since 2020 and COVID, that people that put their money away in gold and silver were very protected against inflation, and most of them likely made even more of a profit. So I mean, I'm happy if my money can at least grow and offset inflation, but if I can make a good healthy profit like we have in the last several years, I mean, that's even better. So I think gold and silver, a lot of this is the same. They do work hand in hand. um, Gold tends to be a little bit more stable, and silver a little more flashy, so you can make maybe a little bit more money there potentially. But I think a good portfolio with a balance of both is the best way to go here. Instead of trying to predict everything, just shift a reasonable amount over to gold and silver and let it sit there and do what it has always done for you, which is grow and protect your money.
Right, right. And it's interesting as you talk about, gold at this floor of 4,000. I mean, it wasn't only a little over a couple years ago that floor was 2,000, maybe even a little less than that. So
Yeah.
even in the midst of this pullback, Some people might say, okay, well, it was two, now it's four. Maybe I missed the boat. Not at all.
Yeah.
Like they're talking about, the boat is actually not going to make the same journey, but it looks like it's even going to go further. So timing wise, it's a very opportune moment. And so, for those of you listening, if you want to learn more about what you can do or how you can go about getting yourself better or further diversified into precious metals, I strongly urge or encourage you to call our office or text our office at 1-800-289-2646. Or you can visit us online at www.swissamerica.com. We got tons of information, free resources to get off to you. Love for you to get a hold of that, and that way you can put yourself in a position to take advantage of what many believe to be this next run. So thanks for tuning in. If you're not subscribed, please do so. We'd love to talk to you more in the future. Have a great rest of your day. See you soon.
Take care.